Hey, welcome back into the channel. Let's talk about debt payments and your profit and loss statement. You might be asking yourself, I don't see my debt payments showing up on there. What's going on? Is my bookkeeper crazy? Am I crazy? Maybe I don't really have that debt. What's going on with all this? Today we're going to dive in at a deep level to help you understand what's going on with your profit and loss statement and where should your debt be showing up. And the biggest thing that we're going to get out of this video today is that you will understand your true cash flow in your business at a level that most business owners will never get to. We're going to cover three big topics today. First of all, where do loan payments show up in your books? And I'll give you a hint, it's someplace that you probably aren't expecting. The second, we're going to help you figure out where your money is going each month. This is one of the biggest questions we get when people come to work with us, and I'll show you the fast track way to understand it. And third, I'm going to show you how to pay off your loans while making sure you can protect the cash flow in your business. Let's dive in. Before we understand loans, we need to understand first what your different financial documents are. So very quickly, let's look at your profit and loss statement. This shows you money into the business and money out of the business, but only the money that we can count from a tax standpoint. We're going to see how this comes back in pretty importantly in just a minute, but not all the money into your business and not all the money out of your business shows up on the P&L. Next, we're going to look at your balance sheet. And a balance sheet is just like taking a snapshot in time, a picture of your financial situation. Shows your assets or stuff you own. It shows your liabilities or stuff you owe. And it shows your equity or the difference between those two. We're going to see where loans show up specifically on the balance sheet and how you can find out what will that do to your cash flow as a result. So let's talk about loans for just a minute. A lot of business owners get really confused when they get a loan and they're making these payments to it and they see money going out of their bank account to pay off their loans, but they don't see that on the profit and loss statement. They see net income at the bottom, revenue minus expenses equals net income. And they're looking at net income and saying, I have all this profit in there, but I don't see that money in my bank account. Where is it? Listen in closely here because this is what determines if you actually understand your cash flow or not. I want you to imagine that you got a $100,000 loan for your business. If you got that money, it came into your bank account, you wouldn't necessarily treat that the same as you would income or revenue in your business, right? Because we don't want to be taxed on a loan. And so by the same logic, we're not getting that in our profit and loss statement as income. We're also not seeing that on our profit and loss statement as an expense when we pay that loan back. This is what confuses so many owners. They're seeing the money go out the door, but they're not seeing it on their profit and loss statement. But here's the thing, the interest from your loan should show up on your P&L. Now, I have a lot of business owners who are looking at their profit and loss statement and they see just a little tiny interest expense. Literally, I want you to think about this right now. On your P&L, do you see an interest expense? A lot of times, bookkeepers don't know about your loans or they aren't getting the statements from your loan every single month, so they have no clue how much you're paying in interest. This is one of the biggest financial hacks that we can have for getting our books cleaner quickly, is to go look at the different loans that you're paying back and make sure that your bookkeeper knows about them and can put that interest expense on there. Because guess what? If they don't, it means that you're missing what could potentially be a big business write-off in your business, and you will be paying more in taxes as a result. In fact, we had a client where we sat down together, we were looking at their books, and we noticed, gosh, you don't have like 3 vehicle loans on there, a bunch of equipment loans. It was almost $100,000 worth of loans that were not listed on their books. It was actually missing from the balance sheet. And so as a result, their bookkeeper wasn't capturing tons, literally almost $10,000 worth of interest expense over the course of the year that they weren't getting a business write-off from. We saved them thousands of dollars in taxes in about 10 minutes by finding that their books were not complete. And so I know we're talking about loans and cash flow and all this stuff, but boy, if you really understand where these should show up, you could actually end up saving yourself a lot of cash. So now looking back at this whole cash flow situation with loans, you could actually be in a situation where your P&L is showing profit. It might even show a lot of profit, But if you have a lot of principal debt payback or paying back an initial loan, you could actually be cash flow negative in your business. For example, if it shows that you have $15,000 of profit every month on your P&L, well, guess what? You're going to be taxed on that $15,000 of profit. But then let's imagine that you had $20,000 of debt repayment every month going to loan principal. There would be a $5,000 loss from a cash flow standpoint. So you could be spending $5,000 more than you're bringing in, and you're still paying taxes on that money. It breaks people's brains, and it makes me cry inside a little bit when I see that, but you need to understand that your debt repayments come out after your net income. And you might still be paying taxes on that net income to begin with. So you really need to get a handle on how much is going out the door in debt every single month. So how do we calculate that? How do we decide and understand how much is going out the door to principal debt payments? Here's what you got to do. You need some dirty work time to sit down and look at how much am I really spending every month to pay back my debts? I want you to list out literally every single debt you have. What automobile debt? What loans do you have? Maybe they're payment processor loans. Maybe it's the really terrible 40% interest loans. Go look at every debt that you've got in the business and then look at your repayment on that and see every month, what am I repaying and how much of that is interest and how much of that is principal. This is what we help our clients with all the time in figuring out what is your true cash flow. Because if we don't understand this, you're constantly going to be feeling like it's showing me profit on my P&L, but I don't have the money in the bank. And finally, there are a few extra things that don't show up on your P&L that you need to know about. The first one is owner compensation. If you are an LLC, a sole proprietor, or even if you're an LLC taxed as an S Corp and you take owner's distributions, those distributions or owner's pay will not show up on the P&L. They shouldn't because they're not a business write-off. We have all sorts of tax videos on this channel around how to understand what's a write-off and not. You should go check those videos out. But you really need to understand that owner pay probably won't show up as an expense on your P&L. The second thing is income tax payments. So when you make a tax payment to the IRS, that is a personal tax payment for you, and it's usually not a business write-off, so it's not going to show up on your P&L. If you're finding this content valuable and you want more of it, hit the subscribe button because we have a bunch of great videos coming out on taxes, cash flow management, and making sure that you can pay yourself what you need as an owner. And the last thing that usually won't show up on there is a large asset purchase. So if you buy something big and expensive, it will show up on your balance sheet as an asset for you, but it will not show up as an expense on your P&L. Why? Again, it's because of how taxes and bookkeeping work, but you get to take a tiny slice of that each year as what they call depreciation. And that piece will show up on your profit and loss statement. So to bring all of this together, I want to tell you a quick story of an owner who felt like he was doing well from a profit standpoint, but didn't see the money in his bank account reflected. And he had a whole bunch of debt as a result. We sat down together and he said, I just feel like I'm working so hard, but I don't see any of the benefit from it. And I certainly don't feel like I'm successful, even though my profit and loss statement says I'm profitable. When we looked into his situation, we realized he had about $180,000 of short-term debt that he was paying off. It really freaked him out to see that number. But what we did is we looked at how much he had in the bank versus his actual true cash flow each month. And we made a projection. We said, look, you've got enough in the bank that we can pay off that loan over time and still have money in the bank by the end of that with your current burn rate. That was actually the case. Over the 6 months that we were working together on that, we watched that debt go down and down and down each month. Now, we also watched the bank account go down and down and down. But we saw that, I think we're going to be okay if we can weather this storm. We focused on what we call our 9 cash flow levers in the business, which, by the way, I've got something free for you at the end that you're really going to want to see. But we saw that we could pay off that debt and still have enough money in the bank by the end of the month. And we got the coolest email last month when he said, finally, I've paid this thing off. I had enough cash in the bank, and now I am cash flow positive in the business, so I can really start paying myself again. It is the coolest thing in the world to get to the point where you can say, I don't have that debt anymore, and I have enough cash flow to not only take care of future business expenses and future business growth, but paying myself as an owner. And that's exactly what we do here at CEO Finance Academy. All right, so now that you understand your cash flow so much better, I want to offer you a free gift. I've started noticing in our clients that they had a bunch of problems in their books whether it was a profit and loss statement or a balance sheet that was off. And I started seeing these common things pop up that their bookkeepers weren't catching. And we created what's called the Better Books Checklist. I want to give you that checklist along with our workshop, walking you through your own books so that you can find those errors and make sure that your bookkeeping looks correct and also understand it much deeper as you go. If you click on the link below, it'll get you access to the entire checklist that we give our clients and the workshop walking you through the whole thing. I'm excited to see you in the workshop. Thanks for watching this video.